Where to invest, question mark, how to invest, question mark, and how to execute a trade effectively in a profitable manner is a key aspects that every investor search for, question mark. As there is lot of question mark, so we need to delete all the question mark and insert a solution in front of the question mark. So today in this video we will be decoding all the pros and cons that are available, that is financial term that are available while buying and selling the shares. For buying and selling the shares, we need to have a demat account. Demat account is similar as a bank account, but the mere difference is that the fund available here is used for investment. So demat account, if you're having a demat account, from there the fund you can use for investing in other shares, that is buying or selling the shares. So the shares of the company are listed in the recognized stock exchange. What does the RSA stand for? That is recognized stock exchange. Recognized stock exchange means exchange that is recognized by the government authority. There are many recognized stock exchange, but the most commonly used recognized stock exchange which is used for trading in different kinds of shares are National Stock Exchange, which has its register office in Mumbai, and Bombay Stock Exchange that also has a register office in Bombay. As there is lot of liquid cash trading, as there is lot of liquid cash transaction happening, so there should be a government authority. So the people trust comes when there is a government authority involved in. So government has set up a board known as SEBI, which is commonly known as SEBI, that is Security Exchange Board of India, to see the transaction related matter, and it also regulate all the recognized stock exchange. Today in this video I will be decoding all the financial term that is available that while buying and selling the shares. Buying and selling, today I would be using the Kite application, which is issued by Zerodha, the one of the largest stock broker in India. As there are many stock brokers, as different application you would be using, but the financial term which are available while buying and selling may remain is similar, as I'll be showing to you today. Hello guys, you are watching Finance Lens. As practical is more better than theory, so the second half of the video is gonna be practical. So before starting the video, do smash the like button. Now we start off with our practical session, that is how buying and selling mostly take place in practical manner using a demat account. This is the user interface of the Kite application, which is issued by the Zerodha. Kite application is one of the demat account application which is issued by Zerodha. As an initial term for other demat account application, as there are many stockbroker, will remain similar. So today we will be dealing with how the buying and selling mostly take place in a physical manner in a stock market, and how and what are the financial term available while buying and selling. So just for example, if you are picking up the shares, one share of, just example, Ashok Leyland. So if we are pressing at the buy option, so there are two options available above, that is NSE and BSE. As we can see that there are two different price fluctuation variation in both NSE and BSE. So the price fluctuation doesn't fluctuate, it remain more or less the similar. So here is the quantity option which is available. Quantity mostly stands for the unit which we are fixing for the quantity, be the unit to how much unit we need to buy, and price mostly stands for the price at which there is a market price. CNC and MIS mostly stands for CNC mostly deal with the shares which are buying for a long term, that is holding. For this you need a physical cash, that is how much cash we are having in the fund account, we can buy that much shares. So can we buy more than the fund available in the demat account? Is that possible? Yes, of course it is possible, but that option is available not in CNC, but that option is available using MIS. In MIS we get a leverage effect. Depending on the shares of different company, there can be leverage effect from 3 times to 10 times of the share. Leverage effect mostly deals like if we are having a fund of 10,000, we can still buy a share of 40,000 depending on the leverage effect of different kinds of share. So if we are getting a profit on 10 that shares, we will be getting a profit not on 10,000, but we will be getting our profit on 40,000. As in the same way we will be getting a loss also on not on 10,000 but on 40,000. So as there is limit, so after product we have order, market, limit, SL as well. So we will be decoding these four also. Market mostly stands for the price which is prevailing in the market now, that is the trading. Now the shares of Ashok Leyland is trading at 130.45, so that is the market price. So limit, we can fix our own limit depending on our preference, at what price do we need to, at price we want to buy the shares of different company. SL mostly stands for stop loss. As the name suggests by itself, that stop loss mostly means that limiting our loss. As we can see that here we get we'll be getting an option of trigger price. So if the share doesn't behave in a manner we want, like if you're buying the share, if it goes up then only we'll be earning a profit. So if it is going down we can limit our loss. So for example, if the shares of Ashok Leyland comes down, so we can limit our loss. So we'll fix our stop loss as 128 for this. For example, if you want to fix more lower, you can just fix by yourself. So SL and SLM mostly stand for short stop loss market, as the price at which we will be buying the shares will be at the market price, and stop loss market means the stop loss, the price will be at the market price. We cannot limit the price, but the stop loss will be depending on how we will be limiting our loss. So as the similar manner, stop loss means stop loss market and stop loss market are more or less similar, but the mere difference is mostly the the price at which you are buying the shares in SLM is the market price. So now we come down to variety. We get regular, RGR. LR stands for regular. BO stands for regular, means the regular order. BO stands for the bracket order. Here we can fix our stop loss, as well as we can fix the target price at which we want to sell the share. If the shares we are buying, and if it goes up, we can fix the target price at higher price here, and stop loss we can fix at the lower price here. So we can fix here 128, and here we can fix, for example, we can fix at 132. So if the target price hits at 132, it will sell and we will be earning a profit of 2 rupees. For example, CO stands also for cover order. Mostly CO is a cover order to limit our loss as the user interface pops. So stop loss trigger. So CO mostly stands for cover order. AMO mostly deals with aftermarket order. Aftermarket order means the shares if we can't buy the shares in the trading day, we can fix the order after market closes. The order will be fixed, like for example, the market closes, after the market closes the order will be fixed. If we can't buy the shares, so we can fix an aftermarket order also. Validity, there are different type of validity that are available. So there are two, that is day, it will be trading on the trading day itself, and immediate ordered or cancel. If the price at which we want to buy the shares doesn't hit immediately, it will be immediately ordered or cancel. If it hits, then it will be placed, otherwise it will be cancelled. So after seeing all this, we just need to swipe our button towards the right, and the order will be placed. So if after placing the order will be showing here, it will be shown here first on the pending side if it is not executed, and after it is executed it will be shown in the executed portion. And after executed, we can watch our profit and loss depending on MIS and holding. CNC, mostly for CNC we will be getting our share to see on the holding side, and for MIS we will be getting to see the shares on the position side, which is listed here. So as the buying and selling, so as we have seen all the buying, selling also stands in the similar way. So we'll just see how the selling of the share. Selling also we will getting two options, that is BSC and NSC price, quantity price. As we can see, there is not much difference, but the mere difference is that when we are selling the share, if the price comes at the lower circuit, if the price comes down, and after that we are settling it off, so we will be earning a profit. but if the price goes higher, so we will be earning in the back end side, that is loss. So that is only the difference, but the user interface for buy and sell remains the same. For order we will be getting market, limit, stop loss, market, and even for variety we will be getting the same option, that is regular, bracket order, cover order, aftermarket order. Validity also will be getting day, immediate, ordered or cancel. That is the same option, and after fixing all we just need to swipe it right, and our sell order will be placed. So that's how the buying and selling of shares mostly take place in. That's all for today in this video. Do share your valuable feedback in the comment section available below, and do subscribe to my channel hitting the red subscribe button. That's all for today. Thank you for watching. Bye bye.